Welcome back to Alpha Recap, your post-market breakdown from stockalpha.ai. Great to have you with us after the close. As always, if you have questions, you can reach us at stockalpha.ai and use the Q&A feature to chat with us directly.
Thanks for having me. Big day to unpack. Markets closed with some mixed signals and a lot to chew on.
All right, so let's get to the headline. The White House announced a 5-day pause on strikes targeting Iranian energy infrastructure, and that really changed the tape. Walk us through what happened first.
Sure, the 5-day pause was the single most consequential development on the day. Traders treated it as a near-term de-escalation, and we saw an immediate unwind of risk premia across commodities and fixed income.
When you say unwind, the oil move was dramatic, right?
Dramatic is the right word. Brent crude swung wildly intraday. At one point, it was down as much as 14%. It hit a low near $96 a barrel, before settling closer to about $101 a barrel later in the session.
Wow, 14% intraday is huge. So the market breathed a sigh of relief?
Yes and no. Equities trimmed earlier risk aversion and climbed. Tech and broader risk assets got a lift. And the recent surge in Treasury yields paused. But the relief was qualified because other reports the same day expanded the risk picture.
Right, I read that there was reporting about Iran widening its rhetoric. Tell our listeners what that did to the story.
Reporters quoted Iranian officials explicitly threatening buyers of US Treasuries. That moves the conflict from an energy story into the heart of global finance. Suddenly, the safe haven market, the plumbing of the system, was a possible target.
That sounds unsettling.
Yeah, that tracks. The pause lowered the immediate odds of a wider military escalation, which eased pressure on oil and yields. But the Treasury threats increased the probability of episodic volatility and illiquidity in fixed income.
So, what really stands out here is the market was forced to reprice two conflicting scenarios at once.
Exactly. On one hand, you had de-risking because of the pause. On the other hand, you had a compressed political timeline. Reporting mentioned a 48-hour ultimatum and direct threats to Treasury buyers. Traders were stuck between relief and caution.
Let's break this into a few themes. You had 4 cross-cutting themes in your note. Start with geopolitics.
Geopolitics was still the dominant macro driver, but fractured. The 5-day pause reduced immediate military risk, so risk assets rallied. But the expanded Iranian rhetoric about Treasury buyers changed the narrative. It wasn't just about oil anymore.
I mean, when you step back and look at this, it's a really tricky signal to price.
Totally. The market had to reconcile a plausible cooling window with a credible new threat to the fixed income market. Those are two very different risk sets.
Okay, second theme. Oil volatility and inflation expectations.
Right, oil matters for headline inflation and inflation expectations. A large intraday move like that, again, down as much as 14% intraday and settling near $101, trims a key near-term inflation input. That reduction helped relieve some upward pressure on yields.
So lower oil was one reason yields paused?
Yes, analysts noted that. Lower energy prices tend to ease near-term headline inflation, which can bleed into expectations about central bank policy and therefore yields.
Right. And the other thing is fixed income as a geopolitical front.
This is huge. Threats aimed at Treasury buyers could affect auction demand, dealer positioning, and foreign official flows, all the things that underpin liquidity and the yield curve. If major foreign holders step back, you could see higher stop-out yields and episodic illiquidity, even if oil is calm.
That was one of the parts that stuck with me. The market treated Treasuries not just as a safe haven, but as an actual target.
Exactly. It moves from rhetorical politics into market mechanics. That's why fixed income desks were watching auction metrics very closely after the close.
Short reaction.
Auction demand will be key.
Third and 4. Corporate and sector micro-events were active amid the macro noise, right?
Yes, defense contractors saw volatility as the strike narrative shifted. Energy producers and cyclicals retraced. At the same time, biotech moved on discrete filings. For example, Pfizer and Valneva said they'd seek regulatory approval for a Lyme vaccine, which is a revenue pathway shift. Several small and mid-caps filed Form 8K disclosures with items like material agreements and unregistered equity sales.
And listeners, that means read the exhibits. Form 8Ks can hide the detail.
Totally. The headline is only the start. The exhibits, the attachments, are where you see potential dilution risk, contractual obligations, or fresh performance data.
So what really stands out here is the market was juggling macro headlines and micro filings at the same time.
Yep, that made the tape choppy. Macro moved sectors, while filings moved individual names.
Quick sidebar. There was a small crypto event mentioned too, right?
Yes, an exchange listed the Angolan Kwanza and launched a 7,000 USDT trading kickoff. It's a niche, short-term liquidity and volume catalyst for that pair. Worth noting for traders in emerging market FX or crypto desks, but very tactical.
Okay, let's get practical. What were the key data points folks should remember from today?
Brent crude had that intraday swing, down as much as 14%, low near $96, settled near $101 a barrel. The White House announced a 5-day pause on strikes. There was reporting about a 48-hour ultimatum. Multiple 8K filings hit the tape, including notices from small and mid-cap biotech and other companies.
And for different investor types, what were the implications?
Fixed income allocators needed to watch auction demand, dealer balance sheet capacity, and bid-to-cover ratios. Equity traders saw sector rotation, energy pulled back, defense jittery, tech got some lift. Biotech and small cap holders had more filings to parse. Read the 8K exhibits. Crypto and EM traders saw a micro liquidity event with the Kwanza listing.
Any disagreement among analysts worth flagging?
Yes, analysts agreed the pause caused the oil plunge and eased near-term inflation pressure. Where they diverged was on persistence. Some see this as a true cooling period that reduces risk premia for days. Others worry the compressed political timeline and Treasury threats mean the de-risking could be fragile and episodic.
Honestly, I was a bit surprised by how quickly oil moved.
Yeah, markets can overreact in both directions. That speed is what creates short-term trade opportunities and also sudden risk for positions without liquidity buffers.
All right, quick checklist for listeners who want to stay on top of this over the next couple of days.
Monitor the geopolitical timeline. Keep an eye on the 5-day pause versus the 48-hour ultimatum. Watch crude levels, especially the $96 to $101 range we saw intraday. Track Treasury auction demand and foreign flows. And read 8K exhibits for small caps and biotech.
Short reactions.
Liquidity will tell the story.
Any final takeaways before we sign off?
The tape showed relief and elevated risk at the same time. The pause reduced the immediate odds of a bigger conflict, which helped oil and eased yields, but threats to Treasury buyers kept the safe asset plumbing vulnerable. Analysts note the next 48 hours are likely decisive, whether this becomes a meaningful de-escalation or a fragile lull that leads to episodic repricing.
Great. A quick reminder, this conversation is for informational purposes only, representing analysis and data from today's coverage. We are not giving personalized investment advice, and we never recommend buying, selling, or holding any specific security.
Right. Analysts note momentum and data signals, but individual decisions require your own research or advice from a licensed professional.
All right, that's a wrap. Key takeaways. 1. A presidential 5-day pause pushed oil sharply lower, and stocks got a lift. 2. Reports that Iran threatened Treasury buyers kept fixed income risky and put auction demand front and center. 3. Corporate filings continue to move specific names and deserve detailed review. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll see you after the next close.